In this video, I'm going to give away one of my 9 trading strategies for absolutely free. This strategy is based on ICT concepts, but it has a little twist, okay? You don't need to know the daily bias, you just want to follow the rules strictly, and trust me, you're going to become profitable, okay? So let's get on straight into the video. Okay, so the very first rule is you want to identify a ABC. Patent liquidity sweep. Now what is an ABC pattern? Okay, I teach this in my mentorship, but we are not going to talk about it here. I'm going to teach you the ABC pattern right here in this video. So what is an ABC pattern? So let me show you. This is the air leg. Then we got the B leg. And then we got the C leg, okay? It's very simple. So the C leg, we have a BC, right? So the C leg is a liquidity sweep, okay? It sweeps out the high, okay? As you can see. So this is like an ABC pattern, okay? The A trend in one direction, and then the B leg is a small trend in the opposite direction, okay? And now, by a small trend, I mean a few candles, okay? I do not mean like a huge trend, it's just the way I say it. And the C leg is the movement in the very first direction. So I think I should use the word direction. So the A leg is a move in one direction. The B leg is the move in the opposite direction. And the C leg is once again move in the first direction. So we got a B, C, and the C leg takes out the liquidity. So this is called ABC pattern. Now, this is this sort of pattern that you should be looking for, okay? Once you have identified this pattern, okay, on a 15-minute time frame during London or a New York session, okay, London or New York session. If you don't know how to spot if you can't find, what session is going on, you can go to the indicators, okay? And I use this indicator and type in FXN Asian range, okay? And then when you want to put this on, it's going to just show you, what settings, at what time the session, a specific session starts. So what is the rule number to the candle that sweeps the liquidity should be the lowest or highest out of the range. Now, you need to understand this very, very carefully, okay? We have the air leg, we got the B leg, and then we got the select. So this, when price goes above it, the very first candle that sweeps the liquidity, okay? And then closes, I do not want to see another candle go above it, okay? So let's suppose we have this candle. If that makes sense, I'm gonna try to explain this thing once again, okay? So, you need to understand this carefully. The C leg, okay, the very first candle that goes out of this range, and by range, I mean the liquidity sweep, okay? When price sweeps the liquidity, okay, the very first candle should close, okay? Or it can just wick, and then come down and close here, okay? So the candle can wick, and then it closes here. Now, do not want to see another candle go above that wick. Okay, I want to see price go down. And when, let's say, candle closes out of this range, I do not want to see another candle go above that. I want to see price directly go back into the range. Okay, so I hope it's clear. If it's not clear, let me know in the comment section. I'm gonna try to explain it, okay? It's very simple, and we're not going to show you the example, you're gonna understand it. Okay. So what is the third rule? The third rule is wait for change of character on a smaller time frame within the range, okay? So once the candle closes, okay, let's say the candle closed here, right? You want to drop down to the 1-minute time frame, and on the 1-minute time frame, you're gonna see a structure like this. So so the 1-minute time frame, you're gonna see a structure, something like this. Okay, so we want to wait for a change of character. Now, there could be a bullish, a bearish candle right here. Yeah, British candle right here. Oh, God, what the freak? Now, This could be considered change of factory as well. Hey, you do not want to look for lows or highs. It could just be one candle, okay? That is considered structure, so you want to look for a market structure shift, okay? So let's suppose that this is a low or a structure, and price breaks the structure. Once price breaks the structure, okay? And one more thing, this is not a valid structure, okay? Why? Because it came back after taking out the liquidity, okay? And then it made another high for me. This is not the structure. I want to see a break of this structure that was the structure that was created before liquidity sweep. Okay, so I'm going to type it here. The structure that was created before liquidity sweep. Okay, so you want to look for that, okay? This is not considered the prime structure. Why? Because it touched this line. Even if it touches, even if it touches this line, this our range line, and then comes back and creates another high, and then it breaks, it's not a valid structure because a price touched and then wrecked it off this level. So for me, this is not a structure within the range. I want to see a structure get broken within the range without before price sweeps to look at it. Yes, this is when, let's say, price street, it breaks the structure right around. Now, this is a valid market structure for me because why? Because this structure was created before a liquidity sweep, and I'm going to explain it to you more properly when I show you the examples. Now what is the next rule? You have a change of factor on a smaller time frame, and then you want to have your entry at extreme fair value gap or block, okay? So let's say your fair value gap is the extreme fair value gap. Okay, so you do not want to use the first failure gap or the second, you want to use the extreme, the highest one. Okay, yeah, you're gonna miss sometimes, you're gonna miss the trades, but it's the best way, okay? So let's say this fair value gap. Right around here, you just want to set up your sell limit order, okay? And then you want to wait for price to go down up to here. And boom, this is your entry, and now where you want to take your take profit is the low of the B leg. So let me just this is so we have a leg, B leg and C leg. The low of the B leg is your take profit leave. Okay, you want to take your profits at this level. Now risk management is totally up to you. I'm not going to teach you risk management, but this is where I take my profits, and now you do not want to hold your trade without going break even. You should go break even when some structure is broken after you are in the trade. Okay, just to be on the safe side. And then you can maybe take party Ls. It really depends up to you. So this is very simple, guys. It might sound a little complicated to you, I don't know. I hope I explain it well, but I'm gonna explain to you in a very good way now, okay? So what do we have is we got the A leg, then we got the B leg, and then we got the C leg. Now, you might ask me, why do you not consider this a BC? Well, and okay, but as you can see, if the price keeps going higher, then my A leg becomes this, my B leg becomes this, and my select becomes this, okay? So once you have identified an ABC pattern, okay, so we got the A B.so when we have A and B, you want to draw